Hey YouTube, this is the April 2020 update for Project 1 million. This will probably be the last update. The markets are too volatile for me. I don't know what will happen with the coronavirus situation. I am going to liquidate all my positions and I am going to buy a house and just rent it out and get rental income. I can't stand the volatility in the market. Long-term investing is not for me. April Fools. If you know me, you know I love investing and I am a long-term investor. And the best time to invest is during a bear market. I don't know when the bottom will be, but I buy on the way down and I enjoy the fruits on the way up. I have been buying a lot in March and I can't wait to tell you about it in the April 2020 update for Project 1 million. So at the end of March, this is how the portfolio looks like. I took the opportunity in March to diversify the portfolio a little, and I also took the opportunity to buy into certain stocks that I have been eyeing and also some ETFs that I've been talking about in some previous videos. So my top three positions are still more or less the same: Amazon, Facebook, and Google, and they make up about 44% of the portfolio. I took the opportunity to buy more heavily into Intuitive Surgical, so this has pushed it up to my fourth biggest position right now, along with Visa. I also bought some Baba and I also bought some Mastercard. And Booking has had a terrible time. Booking is right smack in the middle of the current crisis in terms of being a leader in travel bookings and travel in general. So I expect Booking to take a beating. I'm not selling shares. That's not my style. And I know Booking will recover eventually as well once it becomes normal to travel again. And I'm sure that they will come. So these are my top 8 positions at the moment, and together they make up about 73% of the portfolio. I decided to use some color coding this time to just show you different aspects of the portfolio. So the one in green are basically my top holdings at the moment. I also hold some of the S&P 500 ETF that's in yellow. And so anything above that ETF, this is basically the benchmark that I aim to beat over the long term. So anything above that is a core holding, which I'm pretty confident will beat the benchmark. And anything below that is not yet a core holding, but could become a core holding. And the ones in blue, they're not core holdings yet, but they have a significant percentage. 2%, not that big, but not that small either. So I decided to highlight them in blue. So I also took the opportunity to buy some other stocks, like I wanted to buy more of S&P Global. I wanted to finally buy into Adobe, and I got the chance to do that in March. I also bought a little more of Boeing. Boeing, again, like Booking, is right smack in the middle of this crisis. But again, I expect once air travel becomes normal again, there are only two major aircraft manufacturers, Boeing and Airbus, and between the two, I like Boeing a bit more. So I think Boeing will bounce back as well over the long term. But this is probably something you have to hold for 1 or 2 years or 3 years at least to make a decent return on it. I also took the opportunity to buy into MSCI. MSCI might become a larger holding. I also bought Autodesk. Again, I like Autodesk. It reminds me of Adobe, but it's a little earlier in the transition towards a subscription business model. So that's one reason why I feel it has a lot of potential. So I may add into my order desk holdings if the price is right. I also bought some PayPal, new position. Bought more of the Nasdaq Triple Q ETF. Trilio is relatively new position as well. I also bought into the expanded tech ETF, and I always include this in my monthly comparisons. And so I decided, I think for much of last year it was beating my ass, so I thought, why not just buy some of it as well? So I bought into that. I also bought into Microsoft. I don't like Microsoft because it pays a dividend, but I do like Microsoft because it's the number 2 cloud player and number 1 in office productivity. And so if the price goes down, I might buy even more of Microsoft. I also had a chance to buy into a semiconductor ETF, and I think that's an interesting field. The likes of AMD, Nvidia, Intel, of course. So something I wanted some exposure to. I also bought into a SaaS ETF, a software as a service ETF. There are a lot of promising players here, and I don't understand them all too well, so that's why I decided to just buy an ETF. So I get exposure to a number of SaaS players. Another interesting pick, I think, is Beyond Meat. Now, Beyond Meat was actually a company that I was critical of earlier when, the price was skyrocketing and so on. But the price really fell, and I understood the business a bit more. The thing about Beyond Meat is it's not the type of company I would usually buy because I don't think it has a strong moat, actually, like some of the other companies I have, like Facebook, Amazon, or Google. I think they have very strong moats. Beyond Meat is basically just selling a commodity, a product, and anybody else could copy that product perhaps. But I do think there is a big trend towards more plant-based eating, and I do think Beyond Meat, along with Impossible Burger, is probably the leader. And so I think there will be a number of successful winners in this field, and I think Beyond Meat will also partake in that success. Although it may not be a runaway success, I think it will definitely grow over time. But I'm being very cautious with my purchase price with Beyond Meat, so only if I see a good price, and then I only buy more if I see an even better price than that. And other than that, I'm just okay to just hold a minor position in it. And of course, I'll research a bit more on it, and if I get more confident in it, I might even buy more of it. And so we have cash at about 3,000, and our total portfolio value is about 180,000 plus. So this portfolio value is even more than the portfolio value at the start of March, and that's because I've been adding a lot of cash in and I've been buying a lot of stocks in March. So let's run through what I've been doing in the account. So towards the end of February, I already started buying. Of course, now that I know that the market would have fallen much more, I wish I had bought more when the market had actually fallen to its lows rather than at the end of Feb. But we don't know. I don't know. The market could fall even further from here. So what I do is I just keep buying the more the market falls. And I think that is a strategy that will serve me well in the long term. I've also been selling a lot of put options. So I've been putting in money, so on here. Then I think the market fell more, and I bought more stocks, as you can see here. Put in more money, and I think the market fell even more, and I bought more stocks here. Even picked up Boeing at $160. Yep, and the market fell more. I sold some puts. So I think selling puts has been my way of profiting from the fall in the market. Some people like to short sell, and I am not the short seller. I don't like that. But I think I can still make money when the market is falling, and that is by selling put options. So I've been selling a lot of put options, and then I also use that premium and then I buy even more stocks, which is what I've been doing here. And I picked up, for example, Beyond Meat at $54, which I think is a decent price, but we don't know yet. Bought Adobe, bought Autodesk, so on, putting more money, bought more stocks. So far, this seems to have been the bottom when I bought PayPal at about $82. But we don't know. I mean, I could see PayPal at 75, 65 one day. I mean, the market could fall another 15-20%. But I will be adding in money and I will be buying more stocks as the market falls. Let's take a look at the options. So basically, these are all the open options I have at the moment. Some have not been very good bets, some have been decent bets. I'm not sure yet whether I'll make money off all the option selling at the end of the day. So far, it seems to have made an impact. And I'll show you that later in terms of the year-to-date return of the entire portfolio. So you can see in the upwork here, iRobot, Trip.com, some Under Armour, Wayfair, Uber, Skrill, Welltower, Carnival, Baozun, Brookfield Asset Management, and Fit. So right now I have open position value of about $12,000. So if I would buy back all these put option contracts that I sold, I would need to cough up 12,000. That's the difference between the net liquidating value here and in the 180,000 I showed you in my Excel file in terms of my stock positions. So my stock positions, they add up to 180,000, but when this platform calculates a net liquidating value, they minus off the open options contracts. So that's how you get 168. But eventually, I mean, most of these put options could expire worthless, so meaning I mean, I get to keep the premium basically. I think in total I've collected about roughly 8 to 9,000 in terms of premiums, and but of course in the open value of the contracts is still 12,000, so I'm still losing money on the put options I've sold. But as time passes on, as the market goes up, hopefully this value will come down, and it will come down quite dramatically maybe. I think at the height of the crash, when the market was bottoming, this was about 18,000. So that did get a bit worrying, because some of these stocks will definitely be assigned in the end, so I'll need to put in the money, especially stocks like Carnival. I'm not that keen on actually holding them long term, or even Wayfair, but I thought I could make some money by selling put options. But if push comes to shove and I have to buy them if they are signed, then I will have to come up with that money. So, but nothing that will really break the account. I mean, in terms of having to buy something if it is assigned. So I try to make small bets. So small bets that I can afford, basically. So let's see how that turns out in a few months. So let's look at the performance of the portfolio year to date. So basically, this is the ending value at the end of the month. This is the starting value at the start of the year. This is how much money I've added throughout the year. 0 withdrawals, and then you just divide it over the starting value plus the additions over the year so far. So at the end of the day, we get a value of about minus 8.21% year to date. And if you want the minus off the open contracts value from the total stock value, then you get about minus 14%. So with leverage, basically consider the open option value contracts leverage, because I'm not putting up money right now. So generally, I think this is a decent result compared to where the markets are. Let's take a look at the markets actually. So I have the S&P 500, I have the Nasdaq, I have the IGM Expanded Tech ETF, the Vanguard Technology ETF, and Berkshire Focus. I forgot to add the Dow, so let's add that in. Okay, let's take a look at this. So the Dow has been, in the dumps basically. It's down about 23%. So I'm clearly beating the Dow. I'm also beating the S&P 500. The S&P 500 is minus 20, almost minus 20%. The Nasdaq is done pretty okay. It's minus 13%. The two tech ETFs minus 10, minus 11. So I'm beating them if you include the leverage. And I'm losing out to Berkshire Focus so far this year, but I'm beating almost everything else. Let's take a look at our friend at Fundsmith, Terry Smith, how he is doing. Terry Smith is doing not too bad actually, minus 7.87 year to date. I think it would be a bit misleading because actually I think the pound has fallen quite a bit. So that's why it is not as bad as it looks. I think the pound has fallen maybe for 3 or 4% at least. So if it was currency neutral, maybe this would be minus 10, minus 11 percent. But anyway, I think he has done decently as well. In fact, he is beating Project 1 million at this point of time. If you're interested to copy me on eToro, this has been the performance so far for March, minus 8, and year to date we're minus 12. So this is purely buy and hold without the leverage that I have in my Project 1 million portfolio. I was a bit unlucky with the timing of this portfolio. If I just started a few weeks later or a month later, I think the portfolio performance of this will be dramatically different. But anyway, it doesn't really matter. A few months or a few weeks doesn't matter because this is going to be a long-term portfolio for many years to come. If you're interested to copy me, head over to eToro and you can copy this portfolio, which basically replicates the portfolio in Project 1 million. Every quarter, I also look at the best performing or the worst performing stocks for that quarter. So let's take a look. We have Amazon, we have Google, Facebook, Intuitive Surgical, Visa, Alibaba, MasterCard, Booking. These are the core holdings currently in my portfolio. So let's take a look at Booking. Has been down almost 36%. It's been really beaten down. Purple, what's purple? Purple is Facebook. Facebook is also down about minus 20%. I think this is Google. Google is down about minus 15%. Alibaba is down minus 9%. Visa is down minus 11%. Amazingly, Amazon is actually up for the year. It is up 5.51%. So luckily, I had Amazon at the top position, and it was just, I think, coincidence. I do like Amazon a bit more than a lot of these other holdings, but it's a good thing Amazon has stayed strong. And the way the crisis has unfolded is just the fact that you have to rely more on some of the services that Amazon is going to provide, like e-commerce. And I think the one that is not getting enough headlines is actually cloud computing, because people are going to watch Netflix, and Netflix is hosted on Amazon Cloud. And so Amazon Cloud is actually going to see a lot more business as well, and that will probably be good news for Amazon going forward. So that's the update. I don't know where the markets will go from here. I don't know how long this virus situation will last, but I'm an optimist at heart. I'm confident we can overcome it. But my strategy is basically a long-term investing strategy. I will buy and hold, and I will buy more as the market dips. If you would like to be a patron and a supporter of the channel, jump over to our Patreon website and you can subscribe to one of our membership levels. You can also gain personal access through me and also my immediate thoughts and actions in the stock market through Discord at about $5 per month. We look forward to seeing you on the Discord chat. So if you like what you saw in this video, please give this video a thumbs up. Please subscribe to the channel if you have not, so for future updates. And if you like the general platform, the eToro platform, and you like the ability to copy good investors, I suggest you join the eToro platform. You can use my link in the description tab, and you can even get an extra $50 to start trading. So thank you for watching. I hope you took away some good points from this video. I hope you stay with us on this journey, this long-term journey, and we'll see you in the next video.